Welcome to ForexTV.com's PM Exchange. It's Thursday, October 15th, 2009. I'm Julie Sinha with your currency commentary. The U.S. dollar rose against the yen and recouped losses earlier versus commodity-linked currencies. Long-term players were considering when the Fed will raise U.S. interest rates from current record lows near zero. Of course, the Fed suggested they don't see inflation as risk in the near future, and traders say in that case they continue to favor higher-yielding currencies over the greenback. Encouraging U.S. data prompted some profit-taking on the greenback's recent slide. And in data today, consumer prices rose a modest 0.2% last month, and new applications for jobless benefits fell to a 9-month low. New York State manufacturing reached a 5-year high. And looking at recent action, the euro moved up and down, but still managed to remain near a 14-month peak above 149. Some analysts say profit-taking may be on deck, particularly if the euro fails to retest the 149.67 level, but then makes a further push to 150. Now, joining us in the studio is FX Educator President Ed Ponsi to discuss this and other price action. Ed, thanks for being here with us.
Thanks, Julie. Good to be here.
And one thing I didn't mention was the soaring sterling today. It's been pretty interesting as we've seen sterling get pummeled just last week. So what's going on with that currency right now?
Okay, that's the big story today, and the sterling's on fire today. Comments from the Bank of England earlier today set it off, but I gotta believe those comments could be misinterpreted. They deal with quantitative easing and whether or not the Bank of England is going to continue that policy. There's a chance they may extend that policy and keep it going. But just the same, there was buying of sterling on that news. And then I think we saw a lot of short covering. So I really think it's overdone. I'm looking to sell short sterling again as it pops up here because I think that this is basically a short covering rally. And now that it's running out of steam, I'm thinking about putting my foot in the water on a short position on cable.
And those comments that you're referring to from the BOE, that was policymaker Paul Fisher, and he told the Financial Times that he felt more confident the central bank's asset purchase program was working. How do you feel about those comments that he said?
Okay, well, working, that doesn't necessarily mean it's ending. In fact, it could mean it's working and they have to keep it going. So I think some traders interpret that as meaning that the quantitative easing is coming to an end and therefore they bought sterling. But really, you could look at his comments either way. It's possible that they may continue quantitative easing longer than anyone expected. He also said that they would never explicitly say when the policy was over. So I think some people look at that and they said, well, maybe it's over now, but it doesn't necessarily mean that. He's not necessarily going to tell you when the Bank of England is finished with QE, but he's saying that he's not going to say when it ends. And always leave that possibility open that it can continue.
And when we're looking at sterling, it jumped 3% earlier against the yen on those comments, amid those comments. And at the same time, then, like we were discussing earlier, you have this official from the BOJ, or I'm sorry, from Japan and Fuji, and he's contradicting what the BOJ is saying.
Yes.
What's the story there, and is that impacting the yen?
Oh, yeah. Well, that's fantastic. I love the new finance minister in Japan, Mr. Fuji. It's really making things exciting for currency traders. First, he basically came out. Now, first of all, he only took office about a month ago. And one of the first things he said was that he was not going to intervene. He doesn't think intervening is right. He thinks it's bad policy. And so the yen immediately became stronger. Then Fuji said, well, maybe we should intervene if things get too messy. Then the yen went the other way. Now that the yen's gone the other way, he's starting to sound more like the Fuji from a month ago. So this is keeping everyone on their toes. Not only that, but Bank of Japan came out and said the economy was improving last night, and Mr. Fuji then came out and said, well, maybe not so much. So Mr. Fuji is keeping traders on their toes. I'm sure he's giving a lot of agita to a lot of yen traders. But then again, those of us who like volatility, we like Mr. Fuji. I got to tell you something, too. I think he's right about a few things. First of all, he's saying that they should abandon this policy of a weak yen, which has basically been the policy for decades in Japan. He says there's a better way. And that's really at the core of his comments. I think that's what most people are missing. Why should we have to depend on exports? Let's create demand at home. Let's have a more balanced economy. That's what I think Fuji's really going after. And by saying that a stronger yen is not necessarily a bad thing, you could say that Fuji is saying, well, if the U.S. wants to give up its throne as the world's reserve currency, maybe we should try that crown on. Try it on for size.
And now let's look at the Aussie. Now you have comments coming from that region too. It seems like it's a week for officials to be a lot more talkative.
Very talkative and very interesting comments out of Australia.
Yeah, that's from Central Bank Chief Glenn Stevens, and he's talking more about interest rate hikes to come. And then we saw the dollar hit a 14-month low against the Aussie. So it's like it's a time for a lot of talk.
It's time to keep those news wires warmed up because the central bank comments just keep coming. And from Australia, we're hearing that rates are probably going to go up now. Based on his comments from in the last 24 hours, I'd say that the chance of a 50 basis point rate hike is on the table now for November. So I think you're going to see Australian rates at 3.75 sooner rather than later. And that means that Australia is even a better candidate for the carry trade. Look out for Aussie yen and Aussie USD. Aussie USD, I think, is heading toward parity. I think it's going to happen. I don't know when, but it's heading in that direction. There's no reason to get off that train. And
let's also talk about dollar versus CAD, because that also, the dollar, found some gains there, as it did with the yen earlier today.
Yes.
It seems like there's a lot more volatility. The majors are coming back with a vengeance and giving opportunities to traders right now.
Definitely. And oil up big today, about 4%. So that's going to impact Canadian dollar. Plus, Canadian dollar is benefiting from the high price of gold. We're seeing Canadian dollar getting very close to parity again. No problem making it to parity before the end of the year on Canadian dollar once again. And why not? It is they have the gold, they have the oil, and they have the U.S. as their biggest customer. That's probably the only negative I can think of. Other than that, that's probably why I prefer Australia. Australia is more dependent on China, whereas Canada's a little bit more dependent on the United States. I would rank that as a disadvantage at this point, but I still think the commodity currencies are the way to go. Australia, New Zealand, Canada, Brazil, it's hard to go wrong, I think. It's a one-way trade, and even though it's already had quite a run, there's no reason to think it isn't going to continue.
And then what's interesting right now, too, is that the recurring theme in a lot of interviews has been continued dollar weakness, and then the dollar manages to, show itself and tell or show everyone that they're wrong. Yesterday we talked to Derek Fry, and he's like, I'm long the U.S. dollar, and he's a believer in it coming back. What must fall, what falls has to come back up, like you said, with any market. What are your thoughts about this, and this on top of the profit-taking that we're seeing with earnings season underway and some positive results, bringing back that inverse market correlation between equities and the dollar?
Well, first of all, I really like Derek, but I don't always, I guess I don't always agree with him, and in this case I have to disagree because I really feel that, in the world of trading there is no gravity. What goes up never has to come down, and what goes down certainly never has to go back up. The thing about the dollar is, one of the things that we saw in the second quarter, central banks, when they allocated funds and added funds to their reserves, only 1/3 of it was U.S. dollars. Normally it's 2/3. Now it's 1/3. They're clearly, all this talk about moving away from the dollar, now we're actually beginning to see it. A lot of that money went toward euros and yen instead of dollars. And no big surprise, the euro and the yen have been very big performers, as the dollar has been a very poor performer. The way I look at it is this: the dollar has the most to lose. The dollar is on top of the mountain. It's the reserve currency of the world. Therefore, it has the most to lose, and the way that we're behaving in this country and the policies that we're following almost guarantee that the dollar is going to fall.
And that's